Right. So you mentioned the consumer slowdown. It certainly is here. At least that's what we're getting from some of these warnings on Wall Street. So Walmart, take a look, shares down sharply. The company did lower its outlook and says that customers are spending more on food and less on discretionary items, higher margin items like clothes and electronics. Walmart also unable to pass on those costs to its consumers as effectively as some of the other retailers. Now look at shares of Adidas, lower in today's trade, also putting out a warning today, taking down sales, margin and earnings guidance, mostly on weakness due to the Chinese market because of those rolling shutdowns on COVID, but also saying that the consumer is facing challenging macro conditions that could lead to an overall slowdown in spending, and that guidance captures that. And then there's Shopify, the stock getting crushed after announcing layoffs for about 10% of its global workforce. That works out to roughly 1,000 workers. The company CEO telling staff he misjudged how long the pandemic e-commerce boom would last. The stock is down another 13%. So the takeaway on the consumer, Stephanie, is what?
I think it's very mixed. I really do, because you mentioned all those companies, but on the flip side, you know just as well as I, Coca-Cola had a good number, and they raised their sales number to 12 to 13%, right? And we had Pepsi last week that did the same, that talked about a very strong consumer, resilient consumer in terms of demand in the face of double-digit price increases. We also had McDonald's this morning, and they posted a 9.7% comp, and they had upper single-digit comps across every region. And so they're doing a really good job in terms of the menu changes and delivery and digital and all that kind of thing. So, yeah, they're all seeing inflation, but they're also saying that demand has held up. So it's a very mixed picture at this point. We'll have to see, Sarah, if these companies that I just mentioned have pricing power or not, because that's critical for them, at least at the onset. But I think it's a mixed consumer, and I think the high end is doing better than the low end. And I think, you know what, if I had to choose between Target and Walmart, I would take Target, not because I own it. I do own it, but it has lagged Walmart by 23% year to date, and it trades at 13 times forward estimates, and it gives you a decent yield, and they've already taken their medicine. So I think Walmart was late to doing this.
They're more of a staple. They're
right?
more aren't they considered more recession-proof because they've got such a big food business?
They do, but so does Target. I mean, Target has been getting, they're more of a combination. They definitely have more general merchandise versus food, but they have been increasing their food mix over the time. So, I don't know. I mean, I just think it's a very mixed picture. I mean, the sector got clobbered. And by the way, my favorite, Costco, is still trading at 39 times earnings, and it hangs in there. But I'm watching that one to actually get back in at some point.
It is getting hit today on the back of the Walmart news. I would say it varies by income group and also by category. It really depends just where you are right now.
Yeah.
Apparel doesn't look great.
For sure.